At first, it was just a whisper. A rumor crawling through trading floors, echoing in the minds of investors, slithering across social media. A single sentence that turns calm oceans into violent storms. The market is about to collapse. Suddenly, charts look like cliff edges. News anchors sound like doomsday prophets. And every investor starts checking their portfolio the way you check your pulse in the middle of the night, terrified that the next notification might be the one that ends everything. But here's the truth nobody wants to admit. People don't fear losing money. They fear losing control. And when markets shake, when the ground beneath your wealth starts to tremble, even billionaires panic like children in the dark. Tonight, we're not just talking about a market dip. We're diving into the psychology of fear, the shadows behind the charts, and the invisible cracks forming beneath the global economy. Welcome to a story of greed, fear, manipulation, and the terrifying question haunting millions. Is the next market collapse already here? The world of finance looks calm on the surface. People are still buying cars, drinking coffee, scrolling through Instagram reels. But beneath that quiet, something is shaking. Slowly, quietly, dangerously, like the soft creaking sound a building makes right before it comes crashing down. Investors across the world, small traders, fund managers, even CEOs, are saying the same thing. Something doesn't feel right.
But why?
Why does everyone feel that the market is standing on the edge of a cliff? Reason 1. The cycles never lie. Every major collapse in history, the Great Depression, the dot-com crash, the 2008 financial crisis, all of them had one thing in common. People saw it coming but ignored the signs. Markets move in cycles like seasons.
Boom. Bust.
Recovery.
Repeat.
And every time the boom lasts too long, people get comfortable, overconfident, blinded. They start believing the oldest, dumbest lie ever told in finance. This time it's different, but it's never different. When greed goes too far, the market always cleans itself, ruthlessly. And right now, we're at that point in the cycle where everything looks too perfect, too inflated, too good to be true, which usually means the storm is about to begin. Reason 2. The debt monster is awake. Governments around the world are drowning in more debt than ever before. Trillions added like it's nothing. Money printed like monopoly paper. Here's the terrifying part. When a government prints too much money, the economy becomes a balloon. Round, shiny, floating. But the bigger it gets, the thinner the walls become. And balloons only do one of two things. They pop, or they sink slowly. Neither is good. Countries are borrowing money to pay back borrowed money. Corporations are taking loans just to survive one more quarter. People are buying things they can't afford with money they don't have. This is not growth. This is a pressure cooker, hissing louder every day. And people feel it. In their bills, in rising prices, in the fear behind every economic announcement. Reason 3. Inflation, the silent killer. Inflation is not just numbers on a report. Inflation is a thief. A thief that steals your purchasing power at night while you sleep. $1 today will not buy the same thing tomorrow. And when people see prices rising, salaries stagnating, and savings shrinking, they panic. Naturally. Inflation is like smoke in a room. You don't see the fire yet, but you know something is burning. And right now, people are choking. Reason 4. The tech bubble 2.0. Look around. AI hype, tech companies valued at billions even with no profit. Startups raising millions based on PowerPoint presentations. Everyone calling themselves an AI expert. It feels exciting, but excitement is dangerous. Because the last time the world got this excited about tech, the dot-com bubble exploded. Today, we're seeing the same signs. Companies priced too high. Speculation with no logic. Investors throwing money like confetti. This isn't innovation. This is mania. And mania always ends with a crash. Reason 5. Retail investors have entered the chat. Earlier, markets were ruled by big institutions. Now, everyone with a smartphone and a little dopamine wants to be a trader. People who can't manage their own sleep schedule, are managing portfolios. TikTok experts, Telegram gurus, random influencers giving stock tips while sitting in their bedroom.
This is not investing.
This is gambling dressed as financial freedom. When inexperienced people flood the market with hope, emotion, and bad decisions, the system becomes unstable. Because retail investors don't understand one thing. Markets move on logic. Retail moves on emotion. And emotions crash harder than charts. Reason 6. Global tensions. One spark can burn everything. Trade battles, oil conflicts, unstable governments. The world right now is a box of matches, waiting for a careless hand. History has shown us something terrifying. Markets don't collapse because of one big thing. They collapse because of many small cracks happening at once. And today, the cracks are everywhere. One sudden event, a political assassination, a financial scandal, a war announcement, is enough to send markets spiraling down overnight. Reason 7. Smart money has already started leaving. Here's a secret most retail investors don't know. Rich people don't announce when they panic. They move quietly,
Silently.
They start withdrawing money, selling positions, moving cash offshore, buying gold, shifting to safer assets. And once the smart money leaves, the collapse becomes inevitable. Because the last people holding the bag are always retail investors, the ones who react late. And guess what? Smart money has already started walking out the door,
Slowly.
without making a sound. But investors can feel it. They don't know the details, but they sense the shift in the air. Reason 8. The media feeds fear. News channels survive on fear. Headlines like, "Market crash imminent," "Economy on life support," "Global recession warning." They don't care if it's true. Fear gets clicks. Clicks make money. And the more fear spreads, the more people start believing. The collapse is near. Even if the crash isn't coming, the fear itself can cause it. That's the paradox. Reason 9. The bubble of everything.
Housing. Stocks. Crypto. Tech.
Bonds. Everything is expensive. Everything is inflated. Everything is fragile. The world is not in one bubble. The world is in multiple bubbles stacked on top of each other like a Jenga tower. All it takes is one block to slip, and the whole structure collapses. Reason 10. The human mind is afraid of change. Humans are wired to sense danger. When the world changes too quickly, AI replacing job, markets moving unpredictably, economies shifting, the brain goes into survival mode. And survival mode whispers, something bad is coming. This is why people feel a collapse is near. Not just because of data, but because their instincts are screaming. The dark truth. The market doesn't collapse because numbers go wrong. The market collapses because humans lose trust. And trust is the most fragile currency in the world. Once people stop believing, the whole system breaks. Wall Street can rebuild. Governments can rebuild. Corporations can rebuild. But when trust collapses, everything else follows. And right now, trust is cracking. Quietly, slowly, fatally. The final message. The market might not collapse tomorrow. It might not collapse this year. But the fear, the tension, the uneasiness everyone feels, that's real. That's powerful. That's dangerous. Because markets don't collapse out of nowhere. They collapse exactly like this. When the signs are ignored, when the cracks are hidden, when everyone whispers the same terrifying question, is this the end? Maybe it is. Maybe it isn't. But remember this. Markets don't move on numbers. Markets move on fear.
And fear is rising.
Faster than anyone expected. Louder than anyone predicted. Darker than anyone is ready for. This is why everyone thinks the market is on the verge of collapse. And in the world of finance, fear itself is the beginning of the fall. Stay alert. Stay prepared. Stay wiser.